All right, today we're putting a true tech giant under the microscope for its quarterly checkup. Now, you might not know the name Lam Research, but I can pretty much guarantee its technology is inside almost every single advanced electronic device you own. So let's open up the charts and see just how healthy this company really is.
You see, Lam Research is one of those absolutely critical behind-the-scenes players. They don't make the chips themselves. What they do is build the incredibly complex, mind-bogglingly precise machines that make the chips. So yeah, if you're watching this on a smartphone, a computer, whatever, you are looking at the end result of their work.
So, think of this whole thing as a financial health checkup. We're going to examine their latest earnings report, this one's for the fourth quarter of 2025, to see how the company is performing. It's kind of like a doctor checking a patient's vital signs.
And that is exactly where we're going to start. We're checking the vital signs for the quarter that wrapped up on December 28, 2025. These are the big headline numbers that give us a quick snapshot of the company's overall financial health.
This is the big question, right? Was it a strong quarter, or are there maybe some underlying signs of trouble? Let's dive into the numbers and find out.
First up, the top line, revenue. Lam Research brought in a staggering $5.34 billion in just 3 months. That is a massive figure, and it speaks volumes about the incredible global demand for their chip-making equipment.
Okay, next, let's look at profit. The official by-the-book number, which is known as GAAP earnings per share, came in at $1.26. This is the profit calculated using all the standard government-mandated accounting rules. Pretty straightforward.
But then, you see this other number, the non-GAAP earnings per share, and it's slightly higher, at $1.27. So why are there two different numbers for profit? What is the story here?
Well, if you look at the key metrics side by side, you'll notice the non-GAAP figures for things like gross margin and operating income are always a little bit higher. And there's a very specific reason for this. And it's actually pretty important for understanding how the company sees itself.
So here's the key takeaway. Think of non-GAAP as the core performance number. It's an adjusted figure where they take out certain one-time or non-cash expenses, like the accounting cost of an old acquisition. The whole idea is to give investors a clearer view of the day-to-day health of the business, without all the noise from those other accounting items.
Okay, so the vital signs look pretty strong. Now let's dig a little deeper and diagnose where all that money is actually coming from. It's time to break down that $5.34 billion revenue figure.
And this geographic breakdown is fascinating. The business is super concentrated in Asia. You've got Taiwan and Korea both accounting for 20%, Japan is at 10%, but the biggest slice of the pie, by a long shot, belongs to
China. A full 35% of all revenue this quarter came from that one country. This just highlights how incredibly critical the Chinese market is to Lam's success. It's their single largest market, which represents both a massive opportunity and, let's be honest, a significant risk, tying their fortunes very closely to the geopolitical landscape. The money also flows in from two main business lines. About $3.3 billion came from what they call systems revenue. That's basically just selling their new, fancy high-tech machines. The other nearly $2 billion came from customer support, which covers all the services, spare parts, and upgrades for the thousands of machines they already have out there in the world.
So, we've seen a strong performance in the past quarter. But as we all know, investing is all about the future. So let's look at the company's own prognosis. What does Lam Research think is coming down the road?
The company's CEO, Tim Archer, gives us a huge clue right here. He says, with AI accelerating, and that is the key driver. The whole AI boom requires a brand new generation of incredibly powerful and complex chips. And building those is not easy. It requires exactly the kind of advanced equipment that Lam specializes in. They're basically positioning themselves as the essential toolmakers for this entire tech revolution.
And that positive outlook from the CEO? It's not just talk, it's baked right into their official forecast. For the first quarter of 2026, Lam is projecting revenue to grow to $5.7 billion, and for non-GAAP earnings to increase to around $1.35. In short, they're telling Wall Street to expect things to keep getting better.
Okay, we've looked at the vital signs, we've diagnosed the revenue streams, and we've checked the future prognosis. Now let's pull it all together and give our final diagnosis of Lam Research's financial health.
So here are the key takeaways from our checkout. First off, Lam had a very strong quarter, and it capped off a record year. Second, their business is heavily concentrated in Asia, with a really significant and potentially risky reliance on China. Third, their future growth is all in on the AI boom. And finally, the company itself is very optimistic, forecasting solid growth heading into the new year.
And this brings us to the final, crucial question. Lam Research is betting big on the AI revolution. Their success is now directly tied to the semiconductor industry's most ambitious projects. So, as the world's hunger for more powerful chips just keeps growing, will their next checkup be even stronger? Or will their heavy reliance on a single market, or maybe a slowdown in the AI gold rush, reveal new challenges ahead? Well, that is the multi-billion-dollar question.